Assalamualaikum, and very good evening to all. First and foremost, I would like to welcome all of you, and thank you very much for spending your time to come here to the very first MACFIS talk about Islamic finance. And today we are very honored to get three very distinguished speakers with us. First, we have Mr. Badlisyah Abdul Ghani. He is the head of Islamic Banking and the head of Corporate Solutions of Middle East and Brunei of the CIMB Group Holdings Berhad. He holds a law degree from the University of Leeds. He is recognized as one of the leaders in the Islamic finance globally. One of his greatest achievements is that he introduced the world's first Sukuk al-Ijarah, which is the world's first istisna Sukuk. I hope I got that right. And then in 2004, Euro Money named him as one of the global top 20 pioneers in the Islamic finance. While in 2007, he was the recipient of Asian Banker Promising Young Banker Award for Malaysia in Asian Banker Achievement Awards event. Currently, he chairs the Islamic Capital Market Committee of the Malaysian Investment Banking Association, and he sits in various other industry committees as well. Our second speaker for the day, we have Mr. Faisal Karbani. He is the CEO and founder of Simply Sharia, which is a company which offers Sharia-compliant financial planning advices. In short, it is a consultancy firm which advises his clients on how financial assets which is Sharia compliant. He is a member of Islamic Finance Experts Group by the Muslim Council of Britain. He is a qualified chartered accountant. Currently, he works at PwC and GlaxoSmithKline as well.
I used to work.
He used to work there, but now he owns his own company. Sorry. In 2005, he moved into the Islamic finance industry, specializing in Sharia-compliant independent financial advice to individuals and corporations. He is also a very regular speaker on Islamic finance-related topics. And our third speaker, which is not here yet, which is going to be Mr. Justin Q. He is a client advisor in JP Morgan. He holds a master's in electrical and electronics engineering from the University of Sheffield. He's been working in JP Morgan for 5 years already, and he's focusing on short-term fixed income products. So I guess that's it for the brief introduction for each of our speakers. So without wasting any time, let's proceed to our talk for the day. So, just a brief reminder to all the speakers, this is going to be like let's make it a casual talk since you guys just got back from the summit a couple of days ago. So, you guys can interject each other if you want, okay?
But they can also interject if they want.
Yeah, you guys too, if you want.
Ask question anytime.
Seriously, I think my voice is loud enough. So let's proceed to the first question of the day. Since this forum is going to be revolving about Islamic finance, let's first ask the main question. How does actually Islamic finance differ from conventional finance?
Sorry, I'll have to use the mic because I'm losing my voice.
It's okay, sir.
Assalamualaikum and a very good afternoon or evening, whichever the case may be. First of all, thank you very much for inviting me to be here. It is always a pleasure to speak with people who has interest to learn about Islamic finance, or may not necessarily have interest to work in Islamic finance industry, but have an interest to know about it. Islamic banking and finance are simply financial products or financial products and services that are made available in the market that provides the same value proposition that conventional banking and finance have for consumers, with the exception that Islamic finance is halal and Sharia compliant. Alright. What we do in Islamic banking is very simple. We are here to provide financial solutions that meet the demand or the financial requirement of our customer. So whatever our customer asks, we will try to provide the product that suits them. So if the customer demand deposit product, if the customer demand financing product to buy a house, to buy a car, if the customer demands corporate financing to finance the expansion of a company's business, or they're looking for funding to build a power plant, they require funding to build highways and the likes, we will provide a financial solutions for it in a manner that complies with Sharia. Right? Everything starts with the demand. Right? And when we provide our products and services to meet that demand, our product and services therefore is exactly what they demand. So it's a deposit product, it is a financing product, it is an investment product, depending whether the customer wants an investment opportunity. It is a unit trust, or it is a takaful if they are asking for something to insure their risk and things like that. So the value proposition at the end of the day is exactly the same as conventional banking and finance. Right? So if the question is there a difference between Islamic banking and conventional banking? From an economic perspective, there is no difference. But from the way it is done, there is a significant difference. Alright? So if you want to buy a house, for example, an Islamic bank will buy the house and sell to you at a markup. The conventional bank will just give you a loan of 100,000 and charge you interest. Full stop. Go and buy the house. I just give you the money, I charge you 10%, go buy the house. That's a conventional bank. So economically, the two financing by Islamic bank and conventional bank is the same. Right? The customer still pays back the bank the same amount of money. But the relationship between the bank and the customer are different. So that's the difference between Islamic banking and finance with conventional finance.
Can I Bismillahirrahmanirrahim. Alhamdulillah Rabbil Alamin. Allahumma salli ala Muhammadin nabiyil ummi wa ala alihi wa sahbihi wasallam. Yeah, what Badlisyah has just told you, I think is a very enlightening way of looking at Islamic finance as it's practiced, because ultimately it's a practical phenomenon and it's got to be useful for people. And it's one thing talking about concepts, but the reality of it is that it's got to be useful, it's got to be practical, it's something that people have to want, and people like Badlisyah's bank and other organizations are trying to provide solutions which are Sharia compliant. Just taking a different look at this from a different angle. Someone told me something, once I've been practicing Islamic finance for a few years, someone told me something which really stuck in my mind in terms of giving you a mental framework of understanding what makes something Sharia compliant, okay? And I'm going to give you a principle. If I knew the Arabic, it would even sound better, and it's quite a famous principle within the Sharia, and that is that all business and finance transactions are allowed as long as the following 3 or 4 principles are not violated. Okay, so you start from the viewpoint that everything is halal, in terms of trade and tijara and business. And in fact, as you know from the Prophet ﷺ's life and from Islamic history, business and economic trade is something very much encouraged, and the Prophet ﷺ himself was very good at doing business. But what are the no-nos? Effectively, there's 3 or 4 things you just need to keep in your mind. Apart from that, if you just apply this principle, then inshallah you will pretty much be able to, just mentally conceptualize, what is allowed and what you can do within Islamic finance. The 3 or 4 violations which mustn't be breached are: 1, which is a very easy one to know and everyone will be just naturally knowing anyway, and that is, there are certain industries, certain types of business that we have to avoid. So industries to do with gambling, pork, alcohol, everyone knows that, right? And that's, for a Muslim, that's it almost goes without saying. The other significant departure is this thing of interest, okay? Interest is forbidden in Islam. And I was given a preview of the kind of questions that I might want to comment on today, and I know this features in maybe the next question, but briefly speaking, interest is forbidden in the Quran. The mainstream scholar view of interest is that it's any form of interest, so anything which is over the principal amount. So if I gave you £100 and I said to you, give me 101, 102, 110 back, that excess over the principal amount would be regarded as interest, okay? And any interest, the majority view amongst all the scholars around the world is that any form of interest, be it small or big, is forbidden. We'll maybe come on to discuss some of the wisdoms behind that prohibition, but just for this moment, just appreciate that certain industries are haram, as we all know. Interest is forbidden. Another important violation which mustn't be breached is something in Arabic language they call gharar, which is often translated as excessive uncertainty. The easiest way to explain this in the initial instance is to say, look, if you were buying something, let's say you were buying an apartment off plan, and someone said to you, look, we're building this lovely complex of apartments, I've got 1 bedroom, 2 bedroom, 3 bedroom, here's the prices, here's the specification of the apartments. If there were some big details missed out in the specification about what furniture you can expect, what flooring you can expect, etc., that would render the contract efficient, and there would be excessive uncertainty because you've agreed a price, but you're not quite sure what you're going to get, where the plot going to be has to be defined, what the specification is going to be, what the square footage is going to be, etc. And what's the wisdom behind that? Clearly, it's to stop contractual disputes emanating. So the Sharia is trying to save you from a situation where you transact with someone, party A and party B transact, and there's something in the contract which isn't specifically specified, the price or the specification or whatever, because what it doesn't want to happen is that you then have a dispute later on and the two parties fall out that you didn't deliver this, I thought you were going to give me this or whatever. So 3 things I've mentioned so far. Haram industries, which we know about, interest, gharar, and then the 4th element, the 4th violation is often grouped together as qimar, which is gambling, or maisir, which is speculation. Again, gambling, you can see the Islamic viewpoint. Again, the idea, some of the wisdom behind this is that if you do something where there is speculation or gambling, then there isn't that deliberate, purposeful economic action or an action by someone which is going to drive a certain economic result. It's just it's a chance. If you're taking a chance on something, you might gain a lot, you might lose a lot, and that's not considered healthy from an economic point of view. And that when that clicked in my mind, that was a real light bulb moment for me, because that just made me think, okay, everything's halal, I should just take it that everything is halal. We can do everything. Allah subhanahu wa ta'ala hasn't created this deen or this way of life to be something which is oppressive, something which is going to stagnate you in going out there, earning your halal rizq for you and your family. But there's just a few no-nos which you just have to be aware of. As long as you keep within those parameters, inshallah, most of the transactions you can consider are halal. So I would just say that at the beginning. But, sorry. Hi, how are you doing?
Hi, I'm Justin.
Justin,
Sorry,
how you doing, Justin? We were just talking about the Sharia compliance. Do you want to? Is it?
Yes, it's right.
Oh, you have your mic, so we can discuss.
So it's Mr. Justin. Welcome, Mr. Justin.
Hello everyone, sorry to be a bit late.
Right. It's okay, you didn't miss much. We just started with the first question.
Okay.
So yeah. So moving on to you right now.
So, would you mind introducing?
Yeah, I'm Faisal.
Faisal, okay.
Yeah, I'm Islamic finance
Okay.
in the UK.
So Badlisyah.
Nice to meet you.
So, JP Morgan.
All right. So the question for Mr. Justin.
That's quick.
What is your comment on the loopholes in conventional finance, which some say contributed to the financial crisis, and what should be amended to further improve the system? Yes, that's a
Wow.
difficult question.
This is a very difficult question actually. When your mind is
Just say JP Morgan cost.
yeah, not really. I really use the name of the Or should I just not talk without the mic? Can you guys hear me in the back?
Yeah.
Can you guys hear me at all?
Okay, no.
No? Yeah? No? No, you can't hear me? Okay, just need to use the mic then. Okay, right. So to start with on the whole financial crisis, I think for the last 4 or 5 years, it has been going on, and we thought we got out of it in 2011. We were forecasting very good growth, and we got hit again. So it was such a long process, and we're not even out of it yet. So as you all know, it all started in the US when we had the housing crisis, when houses were going quite cheaply and people can't repay that, and it triggered a lot of the MBS and ABS couldn't be repaid, and so a lot of banks start to collapse and funding starts drying out. There's run on banks and yada yada. The rest of history you pretty much know, and triggers the credit crisis. Then we have the sovereign crisis we had recently. So I think coming back to your question, actually, what is the loophole in the whole financial system? I think it's the whole system itself. It's not just the financial system. I think it's to do with the regulators. It's to do with the economy. It's to do with everything as a whole big picture. So let's just take the housing crisis as a start that triggered everything in the US. So how did that start? So the US government dropped the interest rate quite low after the dot-com bubble to stimulate growth. And also I think there's some fiscal stimulus package in the back to actually build more houses, so more people are back to afford to buy houses. So more and more instruments were created to provide mortgages for people to be able to access funding to buy houses. And to do that, they don't actually do the right checks, which is what they should do right now. So because housing prices were increasing at that time, so most of the mortgages were actually issued out quite easily to people, and the excessive lending started on from there, and you get the picture that a lot of mortgages were issued and housing prices keep going up. So, and that's one part of it, and the other part of it are banks who actually issue the mortgages out. So for banks to be able to issue mortgages, they need to be able to access funding. And where do they get the funding from? So have you guys heard of the shadow banking system before? Do everyone know what that is? So you have the traditional bank, which you and I can go to the bank and borrow money from. That is the traditional bank. The shadow bankings are things like the money market funds, the repo papers, the stuff that issued by investment banks. So these are called the shadow banking. So you issue paper as a short term. Banks will issue paper, and then the banks will give you funding. They'll hold the paper and repay you back whenever it's actually due. So that's a shadow banking. So working out to 2006, housing prices starts to drop because people couldn't repay the mortgages that they have to repay because of the increase in interest rate at that time. And so people start to run on the banks, people lost confidence, and credit starts to dry up. What should have happened was the regulator should have stepped in at that time to actually spot this problem that before it actually happens, but nothing really actually been done. So that actually triggers a whole credit crisis after that. And then you have banks that actually lose their balance sheet, start to dry up, can't quite repay the positions they actually hold, and it all just snowball, become pretty much trigger the whole crisis. So I know it's a bit quite floppy, jumping back and forth because it's quite a lot of serious events that actually happen. But the whole picture is it's not really anybody's fault to actually be pointing their fingers at. There's no saying that the finance that we have all these times is actually spot on, or there's no saying that all the finance that we have actually is actually wrong. There's no innovation that goes on within the industry to actually meet the demands of what's required in the market. What should have been done was the regulators should work quite closely with the banks and any financial services to actually come up with a package that's actually safe for everyone, which is what they are trying to do right now. So there's plenty of regulations going through on being discussed. Nothing's been finalized, and for us working at bank, everything is quite uncertain because we have no idea what's expected in terms of regulatory wise. So we just have to keep ourselves quite close to the banks. Not going to fully answer the question, but
so if I just may add to what has been said, I think we must realize Islamic banking that we know today, to a degree, is very much similar to conventional banking. Conventional banking that we know today is very much originated from Islamic banking that pre-existed conventional banking. Alright? So basically, it's what we have in the market today is one and the same, except one is haram, one is halal. Alright? There is nothing wrong with the conventional banking system. What was wrong was that that shadow banking system that was unregulated. Nobody knows what they were doing, and they were creating trillions of dollars of assets that nobody knows about, right? And at the end of the day, when the whole bubble bursts, when confidence goes down, it is the bank that suffers. When there's a run on the bank, then there is systemic integrity, breakdown in confidence and the likes. So at the end of the day, everything goes haywire. Right? So if you ask the question, is there a loophole? Is there something wrong with the banking system in the conventional market? The straight answer to that is, there's nothing wrong with it. There is weaknesses. Right? There's nothing wrong with it. Of course, everything can be better. Right? But it is the biggest problem that we had was there were a lot of greed, and you cannot regulate greed. Right? And the greed were not necessarily in the banks. The greed was in every other institution that was not regulated by the bank, by the central bank or the regulators. Right? So that's the underlying problem. One of the underlying problems. There's a lot more small problem, but this is one of the bigger ones. On what Faisal mentioned earlier in regards to the prohibition, I just want to add a little bit to that. The biggest principle, of course, as Faisal mentioned, is that everything is allowed unless clearly stipulated expressly as disallowed in the Quran or in Hadith. Not what the ulama says. Whether it is expressly stated in the Quran and Hadith as prohibited, therefore it cannot be done. Everything else that is not expressly stated on the surface of it is allowed. Alright? Automatic, when you have a discussion, if it's not listed in the Quran and Hadith as disallowed expressly, you can do it on the surface. Then you go into a deeper discussion on whether or not it's good for the society and things like that. There's not a discussion of halal and haram. Okay? There is a discussion of taliban. Alright? It's about whether it's good. Right? So Islamic finance is very simple. Everything is doable, except for a few. Right? So get that fact clear in your mind. And when you look at the prohibition, Faisal has listed a few of the main ones. I just want to give my input in regards to speculation. There is a lot of confusion in the market today that Islamic finance prohibits speculation. Alright? It is not good if you do speculation for the sake of speculating. Meaning you are independent of any tangible business activities. You are just going out there, punt on a currency, thinking that US dollar will go up or down and things like that, and you can make money. But then again, if you look at it, that's not really speculation. That is gambling. You don't know whether US dollar is going to go up or go down, right? So you're gambling that it will go up. So then what's the difference between gambling and speculation? Speculation exists in our life on a daily basis. Right? You go out the door to go to work, to go to class, you don't know whether you're going to come back alive. You probably be hit by a bus, right? And you don't come back. When you have a girlfriend or your boyfriend and you plan to get married, you don't know. You speculate whether you're going to have 1 child, 2 child, 3 children with this potential partner of yours. Alright? For all you know, he's impotent. Alright? You don't know. You are speculating, right, that you will have a beautiful child with this guy. Right? It could be the child going to come out ugly. You don't know. Alright? Okay. So again, this is the concept of speculation, and you cannot avoid speculation. Right? So if you cannot avoid speculation in life, is there a prohibition under Sharia about speculation? And I have researched and I have asked all the scholars that I know in this world. I know a few, not all, so I did not ask everyone. But the scholars that I have asked, please tell me where in the Quran and Hadith that clearly and expressly state that speculation is disallowed. And none of them has been able to come to me with a firm answer. This is the prohibition. Right? There is no prohibition on speculation. Right? But excessive speculation for the sake of speculation is not good for society. Right? It's not haram. It's not good for society. Right? Always remember that. So when we do business, when we want to sell our goods, we speculate. Whether when we export this good to US, will my profit be intact? Because for all I know, when I sell it in dollar, US dollar is going to collapse, right? So my profit, instead of the $10,000 that I'm projecting, I probably just make 5,000 because against my currency is weaker, right? So don't get confused between speculation and gambling. And then when it comes to gharar, I think gharar to a degree has some relevance or similarity with speculation, because you talk about uncertainty. What uncertainty you're talking about? It's uncertainty in contract, right? That is not allowed. Your contract must be certain, just like the common law contract. Your contract must be very clear in terms of the subject matter, who is the buyer and the seller, what is the price, when is the contract happening, right? It must be certain. So gharar is only about uncertainty in contract. It's not about uncertainty in life, right? If we are prohibited from having uncertainty in life, might as well be dead. Alright, so be very clear. This is a basic concept on what is prohibited. Don't be confused about it. Alright, and then when it comes to riba, alright, there's some clarity on riba. What is prohibited is riba. I think Faisal used the terminology interest. It is correct, but I just don't want you guys to get confused. Sometimes interest you are referring to 1%, 2%, 3%. So a lot of people think interest is the numbers, right? The percentage. It's not. It's about the action of charging money on money, right? That is usury. That is riba. You are charging money on air, alright, without any attachment to productive activity, alright. Riba is also about trading ribawi items. So you are buying 1 bowl of rice of the same quality with 2 bowls of rice, and you're buying one bar of gold with 2 bars of gold of the same quality. That is riba, right? You cannot. You can buy 1 bar of gold with 2 bars of silver. That is not riba, alright. So you have an exhaustive list of what is ribawi item, right? So there's two types of riba then. But the interest rate, the LIBOR, CLIBOR, SIBOR in Singapore and the like, those are not, that is not haram. They are just numbers. It is the action that you take using the number that is haram or halal. Right? If you use the number in a loan documentation, lender-borrower relationship, alright, I give you 100, I charge you 10%, alright, that is haram. That behavior is haram. But just like buying the house, as I give you 100, you go buy the house, I charge you 10%, right? But in another circumstances, with the Islamic bank, you want to buy a house, I buy the house at 100,000, I sell to you at 110,000. Markup, you pay me in 5 years' time. Alright? So, I use the same number, 10%. Right, assuming it's the same number, 10%, but I use that number in a buyer-seller relationship. A buy and sell contract. It's a trade contract, not a loan contract. So that's how you differentiate on what is haram in regards to riba. Right. So just wanted you guys to have some clarity on that. Thank you.
Are we okay for time?
Yeah, that's right.
Yeah, okay. No, thank you, Badlisyah, for that. Alhamdulillah, I think that was very good and clear to clarify, because you're young minds looking at this industry from outside and probably trying to make sense of it. And it's important at the beginning to get some important principles clear in your mind. So I think that was very good. I think the only thing I would add to what Justin and Badlisyah was saying, just to add a little more colour to the discussion about the conventional system and what's potentially wrong with it and what has maybe contributed to the financial crisis that we see around us. I don't profess to be an expert in this area, but one can't help but reading about this and thinking about it, especially in these times. And that is the role of money. We've touched on it. And the role of money, interest is forbidden in Islam. The question is, why is it forbidden in Islam? And Allah subhanahu wa ta'ala doesn't actually rationalize that, to the best of my knowledge, in the Quran. He mentions interest is haram unequivocally and clearly, but there's not a list of reasons which are explicitly stated that follow interest is haram because X, Y, Z. But there's been a number of very plausible explanations and rationale and wisdoms given behind that prohibition. And that comes down to the role of money. Money in Islam is basically as one of the scholars, a famous scholar said, is a blessing, as a means of exchange. Because otherwise you would have a barter situation where someone wanted rice and someone else has wheat, and you've got to barter rice for wheat, depending on what the two parties want. But money gives us a common means of exchange, and so it makes life easier for us. So anything that makes life easier is a blessing, alhamdulillah. So the role of money is clearly that, but when you start using money then to make money upon money, so you try to trade money and try and make money upon money without an underlying trade or goods being transacted or services being transacted, then that's one of the wisdoms behind why Islam is forbidden interest or riba, because basically you're trading money. And what that's led to, if you look at the evolution of money, is the fractional reserve system, where you had the goldsmiths in the early times, which were safekeepers for receipts, and then they basically realised that not everyone wasn't coming to claim their gold at one time. So then they started creating receipts over and above the storage of gold, and that was the early beginnings of the fractional reserve system. So what you now have is a system where if you did have a run on the bank, if everyone tried to get the money out of a bank, only a very small percentage of the money would be actually in the bank, because so much money in circulation over and above is based on this fractional reserve system. And that's in an Islamic model, and in Islamic model, you won't have, money has to be backed up by assets. And I'm not going to profess to know the answers to how you would do that in the modern world and the complexities to do with that. But if you just look at some basic stuff around, for example, what this has led to is this debt culture that we see around the world. And for example, in the UK, I've lived in UK pretty much all my life. And if you look at the ratio, it's well documented, if you look at the ratio of property prices in the UK to earnings, average earnings in the UK, the multiple is so high. And that's been prompted by easy debt and easy money, which then has basically led to a situation where we've got an unsustainable situation where people are now, for the basic thing in life, to live in someone's home, it's become oppressive, where you have to take out huge borrowings. We end up paying over 30 years. By the time you've paid it off, you're in your 50s, 60s, and you almost become a slave to the bank. And this is not a healthy way of living, and it enslaves people to this very this kind of almost a financial slavery type thing. So it's a very deep and topic, and I wouldn't want to give an unbalanced view. Because the conventional system does have a lot of good, has developed over a number of centuries, and there's a lot of good and we can learn from it. All I would say is that the key difference for me between Islamic finance and conventional finance is this riba, and that's the money upon money, which is such a fundamental part of the conventional economic and financial system in the world we live in today, and in Islam doesn't allow that. And I think that's a very big difference, and I think there's a lot in there we can learn from, inshallah.
So I guess it's true that what Mr. Badlisyah said a few moments ago when he said that the history of conventional banking itself originated from Islamic banking, whereas the first humans traded using the barter system, and then they come up with money, but then back then the money was backed by assets, and then a few years later they decided, oh, we don't have enough assets, why don't we just simply print money just for the sake of money? So I guess that's true then.
I'm not for sure it's true or not, but then you have to really look back into history. But anyway, I think we talked too much about it already.
Right, moving on. Do you think that Islamic finance can be sorry to say this, but do you think that Islamic finance can be a threat to conventional banking that we have right now, or can the two of them be integrated and work together? What do you guys think? Or
I don't think it's a threat itself. Both systems does work, and they all did evolve in their own ways, from the same root in some ways, from the long years of histories. I think that it's complementary to each other in some ways, because there will be some demands to use Islamic finances, and there will be some demand to use the conventional finances that we all actually see and use today. So I don't think it's a threat, and I think there's a lot to learn from each other in terms of building a much better system for everyone to actually use.
I don't think, Malaysia is a good model. I think in terms of you've got a dual banking system, and alhamdulillah, I think it works quite well. Obviously, Badlisyah will be able to give you a full picture of that. I don't think it's necessarily a threat. I think what it's doing is that, if you think about Islamic finance, 20, 30 years ago, it wasn't even on the map, and in 20, 30 years, it's become, and it's by Allah's will, really, because there's certain events that have happened, the petrodollar boom prompted demand for those type of products in the Middle East. Malaysia developed a model over the years, and alhamdulillah, the Islamic world in the modern time has, through a demand-driven phenomenon, which has to be the case, as Badlisyah said at the beginning, we have now an industry which is, reported to be more than $1 trillion, and people are starting to take note, because partly because of the financial crisis as well, that it does represent a very viable alternative system. Namely, this lack of interest and the fact that things have to be asset backed, and it's a much, it is in many ways a prudent form of going back to basics in some of the conventional tools out there, financial instruments out there. It's going back, there was big calls once the financial crisis hit to go back to basics, and it almost, Islamic finance doesn't try to be too exotic, doesn't try to be too clever. It goes back to some very basic principles about trade and business. And alhamdulillah, people are starting to take note of that. I don't think it's a threat, but it does represent a credible alternative to conventional system. The two can live side by side, and we can learn from the conventional can learn from us. And inshallah, it's a form of, I would even say it's a form of bridging gaps with the conventional in terms of, it's opening people's eyes. Islam unfortunately gets such a bad press, in so many different ways because of the political situation, because of terrorism or whatever. This is a way of saying, look, actually, it's a very balanced religion. It's a very, it purports some very good values, which you can see in practice. Actually, you can see the results. So I think, alhamdulillah, it's only a very positive dynamic in the world today, I think.
How do I see this? Islamic finance, as I said earlier, is very much the same as conventional finance. But when you look at conventional finance today, what you see today did not exist 50 years ago or 100 years ago. Alright? 50, 100 years ago, you will see Islamic finance in the Western Hemisphere. They don't call it Islamic finance, but what they were doing back then, in terms of trust certificates and the likes, they were all exactly the kind of product that Islamic finance is doing today. Alright? So if we really look at it, if we implement Islamic finance properly, interest-based transactions will die. Because why would people pay interest when they can get something cheaper? Alright? And more competitive. So I can answer your question by saying yes and no. Alright? Yes, it will be a threat if we really undertake Islamic finance in its full spectrum, in the manner that conventional finance was before what we have today existed, right? And because interest-based or riba-based financing activities died previously. It was revived in Holland in the, I can't remember, 11th century, one of the centuries. I can't remember my history at the moment. But it was revived in Holland, and it continues to be in the sideline because there are people who wants to do it. But the bulk of the financial market was very much in the same manner as Islamic finance today. Alright? That was done in the West. Right? So the European crisis that you have today, one of the main reasons is because they shot themselves in the foot by moving away from this foundation, from Waqaf. Waqaf existed in Europe for thousands of years. Alright? Waqaf is a component of Islamic finance that we have not really fully developed in modern world today. Excuse me. If you look at the history of the Ottoman Empire, for example, it is the only, well, one of the few, because every Islamic empire has been this way if you really learn their history, is the only time in the history of mankind when government, the only tax that they collect is for the purpose of financing defense of the realm and defense of the country. Right? That's the only tax that they collect. They don't collect tax for education, they don't collect tax for public utilities, they don't collect tax for anything other than defense. The reason is the whole economy was financed under Wakaf by the private sector. Right? And Europe was like that way back then. Okay? You have huge foundations, huge trusts created by families, by individuals and the like. So Europe was basically financed in that manner. The tube was financed and trust. The New York, the same, whatever they call it over in US, it also was financed by trust. Alright? So many things that you see in terms of the industrialization way back then, all were financed in the same manner as Islamic finance. Right? So if we really learn history, Islamic finance has, if we implement it properly, the world will see its value proposition as superior than the current riba-based framework. But then again, that framework is not exclusive to Islamic finance, because conventional finance had it as well. Alright, so both industry can have the same structure. So I think I stop there.
Having said all that, I mean, let's say I'm a non-Muslim. How would Islamic finance be appealing to me? Why would I? Since you said it's not much of a difference between a conventional and Islamic finance, or as a non-Muslim, I have a choice whether I want to invest my assets in a Islamic finance kind of system, or just go with the conventional system. How would I? What are the things that makes Islamic finance appealing to me?
Let me try and answer that first. Whether you are Muslim or you're non-Muslim, you do a commercial transaction because of commercial consideration, right? Full stop. Of course, a Muslim would have the added element of doing a commercial transaction in a manner that is allowing me to be consistent with Sharia, right? So that Muslim will have that added element. But as far as a non-Muslim is concerned, they look for value for money, right? And if they see value for money in any commercial transaction, and it makes sense for them to do it, they will do it. Simple as that. And the way that we have developed Islamic banking and finance in Malaysia, at least, because that's where our main responsibility is as far as CIMB is concerned. Islamic finance in Malaysia is either similar in terms of cost or return to consumer, or better than conventional. It is never worse than conventional. Alright? That is the value proposition of Islamic finance in Malaysia. And I say it is never worse is because automatically any Islamic financing, for example, that you take in Malaysia, you have 20% stamp duty exemption. Automatically it's cheaper. Right? No conventional can compete with that unless there is a specific stamp duty exemption for a particular segment or project. Sukuk market in Malaysia, all sukuk are cheaper between 3 to 5 basis points on a certain tenure to even 20-25 basis points on different tenures. So And that is a huge amount of money if it's a huge issuance, right? And therefore, automatically a CFO of a company, whether they are Muslim or non-Muslim, will be an idiot not to do Sukuk in Malaysia. Alright? I have said in conferences that if your CFO, I said to CEOs of corporate, if your CFO does not do Sukuk, sack him or her. Because it doesn't make sense. Because it is automatically cheaper than conventional. And the reason why it's cheaper is because there is a wider investor base. Alright? And that wider investor base creates bigger demand, and therefore you have better price tension. Alright? The issuer can get better pricing as a result of it. So it's basic demand and supply. Right? We don't have that situation at this moment in time in the global market. Right? Because it is not a perfect market in the same manner as the Malaysian market. Right? There's still a lot of distortion. Right? Yeah. If you talk about Islamic investors in the GCC, they don't behave properly as a fixed income investors. Right? At the beginning of the industry, they still ask an equity type return for a debt transaction. Of course, they have become way better today, but there is still that differences in terms of expectation of a GCC investor and an Asian investor or a European investor for fixed income instrument of the same credit, right? So the quick answer after that long-winded thing is the non-Muslim will do Islamic finance because it's good for their pocket.
Yeah, sure. No, I mean, I think I don't want to. We can move on to another area. But what I was going to just say, I completely echo what Badlisyah said in terms of the non-Muslim. When it comes to Islamic finance, will consider it if the value proposition, the value he's getting from that investment, that financing, he gets good value compared to what he would get something which is non-Islamic. Okay. And you know what Badlisyah is describing for Malaysia is an absolute dream. If we could have that everywhere, we would be, mashallah, flying in Islamic finance because, I mean, there is instances in this country now where banks, Islamic investment banks here, for example, Bank of London and Middle East, Kuwaiti-backed bank here in London, was featured in the Financial Times recently for attracting a lot of investors in their deposit fixed income product because the rates of profit they're offering are very competitive and even better than a lot of conventional products. So it just shows you exactly. It shows you that if you can offer the value proposition, then people will come to you. And in fact, people see Islamic as a form of ethical investment, and on a broader level, the social responsibility investment angle here, the SRI angle, and the ethical investment space has taken off quite a lot over the last decade or so in this country, because people do want to invest in something which has got an ethical side to it, but if the value proposition is there, so definitely.
So, Mr. Justin,
I can answer that as well, actually. Just add on to that one. So, just answer that question. So, I guess from my point of view is, because I do advise corporates on what to invest and how to invest day to day. So, I think it's more understanding where the risks are and is my investment actually safe. So, it doesn't matter what sort of finance or what sort of product you're investing in. So, from an investor point of view, I'm sure if you do have money, lots of money, I guess some of you do have, if you want to invest in any sort of investment, it's all about identifying your risk and your return. You just try to look after that. So it's all about identifying what works best for you. And then, as this gentleman said, it's all about the value in your investment. So it doesn't really matter what sort of system that you actually run. The most important thing is does it actually give you the right value that you actually look for? So
since Mr. Badlisyah mentioned about the Sukuk market, so we've seen in the recent decades, the Sukuk market has been recorded with having quite a significant number of growth, especially in Malaysia. So could you like briefly explain to the floor, because not every one of us, not each and every one of us knows what exactly is the Sukuk market, other than it is an Islamic bond.
Okay. Sukuk in the modern world, modern means in the last 30 years, right? Started in Malaysia in 1990 when Shell, a subsidiary of Shell, issued 150 million Sukuk in ringgit, and that started the whole thing. Right? Sukuk is essentially a simple instrument that allows investors to get a fixed income return. It's a safe paper depending on the credit rating, the credit position of the issuer, and typically people only buy investment grade Sukuk. Right? In the global market, Sukuk started in the year 2000 when Kumpulan Gatri Berhad issued the first global Sukuk, $150 million. The first ringgit was 150 million ringgit. Dollar is 150 million. I don't know why the 150 is common denominator, but it started in 2000. And when the first global Sukuk was structured, when I researched on how to go about doing the deal, we investigated how trust certificate was done in New York. We investigated how investment or certificate was issued in the Ottoman Empire that is tradable. Alright? Sukuk was first issued, or bonds were first issued by the Ottoman Empire, not by any Western countries, but by Turkey. Alright? That is history. Of course, the Western world eventually followed that. But so the first Sukuk in history was under the Ottoman Empire. The first Sukuk in the modern time was in Malaysia. Alright? Sukuk means simply the plural of sak. Sak is a Turkish word that means certificate. Right? It's as simple as that. And the certificate essentially represents basically rights and interests in certain returns or certain activities that generates a certain return. Alright? That's basically what Sukuk means. Alright? It is, if you want to use a definition, a financial definition, it is indebtedness arising from trade activities, as compared to a conventional bond or conventional debenture, which is defined as indebtedness arising from borrowed monies. Alright? Because as I said earlier, the differentiation between conventional and Islamic is essentially one of it is the contract, the relationship that you enter. So under a conventional bond is an IOU. Under an Islamic bond, it is not an IOU contract. It is simply a trade contract that generates or give rise to a fixed income return arising from a trade relationship. Right? So that's why I define it as indebtedness arising from trade activities. So that's essentially what Sukuk is. Alright? Of course, over time, Sukuk has grown in size in terms of share of market in Malaysia. It is now effectively about between 65 to 70% of the secondary, basically of total outstanding issue in Malaysia. is roughly about 80 to 90% in the primary market in Malaysia. Of course, in the global market, its pittance is extremely small as compared to the overall fixed income market globally. It's only roughly, I think, slightly above $100 billion in terms of value, in terms of total issuance in the global market. And there is a huge potential for growth. So that's roughly what Sukuk is, but I do not know exactly that, you know, what you want to know about Sukuk, so you want to ask the question.
I think that's a good introduction to Sukuk, so we can, if anyone wants, I mean, it's a very hot topic because, you know, when you look in the news and you read the press, you'll always hear about Sukuk because, as Badlisyah said, is that it's actually in the last 10, 11 years, it's been, in terms of raising large amounts of capital for projects, infrastructure projects around the world, around the Islamic world, and for big corporates, it's actually been a very big instrument. And so it's always in the news, and there's been a couple of interesting cases in Dubai, for example. Nikhil, you probably know Nikhil, who's one of the major developers in Dubai, who issued Sukuk, and then there was a lot of debate around them possibly defaulting on the Sukuk, and what's the rights of the Sukuk holders, etc. So it's made the news quite a bit, but in essence, it has an underlying trade or asset which makes it halal, and that's the whole essence of Islamic finance, is that it's rooted in real economic activity and real assets, and promoting real economic activity. Justin, you have a perspective on Sukuk?
This is a very good introduction actually from yourself as well.
Okay. Maybe due to Badlisyah, but
So any specific questions on Sukuk?
Maybe we can have that in the question Q&A session after this. We just have one more question left, which is moving forward. Let's have Mr. Justin start first on this, since he's not directly involved in Islamic finance. Let's have it, and then moving back to Mr. Badlisyah. So moving forward, what do you think is the prospect of Islamic finance globally?
I think there's quite a lot of developments going on in terms of, especially in the Middle East itself, there's quite a lot of projects going on, and there's quite a lot of growth and development going on in that region. So I think there will be a lot of innovation and growth for the Islamic finance within that region especially. And for other parts of the world, I think it's about education, the introduction towards the Islamic finance, provides them an alternative product. And once the general, you say the Western world actually understands this product, it might be actually flow into the market, people might start using them.
Alhamdulillah, I think on a global scale, it's very, very positive what can happen. And I think, Malaysia is, mashallah for me, is the model where you can see that really working. And it comes down to value proposition. I mean, I'm in the UK, in a minority Muslim country, trying to give people advice on Sharia compliant financial planning, etc. And the biggest thing we have is there's two big inhibiting factors. One is lack of product, and number two, the value proposition. If we had a situation where with the value proposition was just as good in terms of returns and cost and everything else at the conventional market, we would have a lot more potential clients. But on a global scale, there are, Justin mentioned, I mean, we see we're an embryonic young industry, which perhaps beyond the embryonic stage, but nevertheless a young industry. And there's a lot of, what we find is that in terms of the retail public anyway, in places like Europe, etc., there is a huge amount of education to do. So in tandem with developing products and getting out there, there needs to be a lot of educating on the public, because there's a lot of confusion, there's a lot of skepticism, and as someone once said to me, when you mix religion and business, it's a dangerous cocktail. Because money, when it comes to money, people naturally there should be a healthy degree of skepticism, because you're trying to take your principles of your values from what you believe to be revealed by God into this domain of commerce and finance. And unfortunately, when it comes to money, people do a lot of things which are not right, or are not full of integrity or whatever. So people should be careful. But on the whole, I think it's got a wonderful future. And for you guys out there, certainly, that you're doing the right thing, at your stage, and a lot of you are undergrads, coming, understanding, thinking, listening, finding out more. There's a lot of, I come across a lot of students across the country, for example, who are very, how can I get into Islamic finance, how can I work in Islamic finance, etc. That's fine, but the advice, I was kind of slightly digressing, but the advice I give to you is that use this time in your undergrad years and while you're studying to find out lots about the industry, talk to people, come to programs like this, but ultimately become a professional in whatever you choose to do. So the reason I say that, because even if you're going to Islamic finance, what Islamic finance wants is, firstly, if they want a lawyer, they want a good lawyer who then can come into the Islamic finance space. They don't want someone who's good at Islamic finance, i.e. knows more and is a lousy lawyer. So the point is, become good in whatever you choose to do as your career, be it accounting, be it law, be it economics, whatever, banking. Become good in that. Learn, be the best of the best in that, and then you can apply those skills in the Islamic finance domain, and that's when you'll really be valued.
The prospect of Islamic finance, you have to look at it in two forms. One is in the local markets, because you need to see Islamic finance being developed at local markets, because that's where all the population of the world are. And then you look at the cross-border or global transactions. Right? The prospect of Islamic finance are very good in many parts of the world, right? But it will only be successful if we have effective regulation for it. Because we must always remember Islamic banking and many parts of Islamic finance are regulated activities. The activities that we have under the industry are regulated activities. What that means is that if there is no regulation, you can't do the activity, because you're not licensed as an institution that is able to do financial or regulated financial transactions, right? So you can't be a bank and do banking if you're not licensed as a bank. So if there is no regulation that licenses an Islamic bank or an institution that undertakes Islamic financial transaction, then there is no way you will find Islamic finance prospering and developing in that particular jurisdiction. So countries like Malaysia, countries like Indonesia, Brunei, and a few in the GCC, not all in the GCC, a few in the GCC have established regulation. The only country in the world that has a comprehensive regulatory framework is Malaysia. Malaysia not only have a comprehensive regulatory framework, it has a very comprehensive legislative framework as well, that provides the enabling environment for the industry to exist. It also has a very robust legal framework for Islamic finance. Right? And again, it is the only country that has a Sharia governance framework that is empowered by legislation. Right? So what we need to have in many jurisdictions is what we have in Malaysia. It is, to my mind, the only way for Islamic finance to really have a bright prospect. Right? Without it, it will still be there, but it will be in the fringe. It
won't
won't
achieve its potential.
Yeah, you won't achieve its full potential. You will be in the fringe. And when I say fringe here, it's really fringe because you can't do the main activities because if you're not licensed, you can't do the activities. And so you can perhaps do advisory, you can perhaps do some private equity, right? Because you don't need to be licensed as a private equity firm, right? So you can invest in small companies or you can invest in big companies. You have a lot of money, but those are not regulated activities. Right? So what we want to have is that component that is regulated. Right? In the global market, the prospect is also very bright. But then again, if you look at the conventional space, the only reason why the conventional space have extremely vibrant, deep and broad global market activities is because there are strong indigenous market in the respective jurisdiction. Right? There are banks everywhere in the world, in all the different countries. It is this bank all over the world, this conventional bank all over the world, that are interacting with each other in the global space. Alright? Because they exist in the indigenous market, because they have significant presence and need for interaction with others around the world, global transaction happens. Right? So, Islamic financial market in the global space, the prospect for it depends significantly on the indigenous market being developed. Right? So, there is that correlation. So, yes, I stop.
So now let's open the floor to some questions. You want to take 3 questions at a time, yes? Good.
I have one question. Can you hear?
Yeah.
Right, my name is Ismail from the LSE. I'd like to ask for your clarification on a few theoretical points. You said there was one point where you said conventional banking you have to pay like you take out a loan for 100k and then you have to pay 110k back. But for Islamic finance it's the same but for a different in a different contract. So my question is, wouldn't that in effect like have the same impact on society as interest? Because from what I read, from what financial historians wrote, for example, like Neil Ferguson, the origins of interest is from the moneylenders of Venice in the 15th and 16th century. It's like they lent money to the merchants, and they said this was upkeep for the loans. And they didn't call it interest, but it was in effect an interest. So can you clarify that point? Because maybe I misunderstood your point. Thank you.
Right. Any other questions? Anyone? Yep.
My name is Azrael. I'm from LSE as well. My question is rather quite simple, and it's quite exclusively to Malaysia actually, because I read an article saying that Standard & Poor's actually rated Islamic banking to be a $4 trillion market, with Iran, Saudi Arabia, and Malaysia as one of the countries that have the highest Sharia compliance asset. Just like because myself is more towards SMEs, because I'm interested in small companies. So how do you see the growth of private equity firms that actually have Islamic banking and follow Islamic banking rules instead of any like conventional rules instead? That's all.
Right. Any other questions? Right. And let's proceed with the first 2 questions first then.
Let me try and answer the first question by saying this. In the Quran, it is stated that God has forbidden riba and encouraged trade. Right? And people will say trade is just like riba. This is in the Quran, 1,400 years ago. It is clearly stated that I have forbidden riba, I have encouraged trade, and people will say trade is just like riba. Alright? It's already foreseen that people will say what we do in Islamic banking is just like riba. So ignore it. Right? We are doing nothing more and nothing less than what is encouraged by God in the Quran. They are encouraging us to do trade. Right? Economic effect is similar. Right? There was a question that I had, that was posted to me when I had lunch with two of your colleagues, whether or not the crisis that we have today would have been prevented if Islamic finance were the dominant structure. Right? My answer to that is yes and no. Yes, I said, because there are certain behavior that an Islamic bank is required to adhere to in terms of not be greedy and that kind of stuff. These are all codified requirements in the Quran and Hadith. It's not in the regulation, right? It's in the Quran, right? So, an Islamic bank must operate in a manner that is consistent with Sharia, and therefore we must be consistent with what is stated in the Quran. But the unfortunate thing about being human is that sometimes we abuse things. We don't follow what is required of us. Right? So, because we are human, we tend to be naughty. Alright? And there's always that risk, even though it is Islamic bank that is dominant in the market, the same crisis will happen because we have a tendency to be greedy. Alright? So, no matter what regulation you have, even if it's stated in the Quran, alright, if we want to be naughty, we can be naughty and we can cause a lot of damage. Alright? So that's why I said the answer is yes and no when it comes to that question. So do not be so hung up about the statement that Islamic banking and Islamic and conventional finance is one and the same, because at the end of the day you pay the same thing, right? But the difference here is the behavior of the industry. That is important. The unfortunate thing about today's market is that the behavior that is desired, that is required for Islamic finance, is not 100% visible, right? Because many of the bankers that undertake Islamic finance today are conventional bankers. Right? Because they were never trained. Nobody is trained as an Islamic banker first. Right? They are trained as a conventional banker first, and then later on, when Islamic banks were established, because they are the only bankers around in the city, and banks need to have bankers, and therefore they are hired. Right? So it requires a certain number of years for this behavior to evolve within the bankers that are running Islamic banks. It cannot be overnight. Right? So today you will find a lot of Islamic banks and conventional banks to a degree behaves the same way. Right? But there are Islamic banks that are slowly behaving more consistent with the requirement in the Quran. Right? So give it time. Okay? Give it time. But when it comes to economics, is one and the same. Do not try to waste your time to make it different. Alright? Because it's one and the same. And Islamic finance or conventional finance, the component of the industry is the same. It has banking, and banking you have deposit, the liability business, and you have the asset or financing business. And then you have the asset management, you have the capital market, both equity and debt capital market. You have the insurance or takaful sector. You have the private equity. You have non-banking financial institutions like trust companies and whatever, that kind of stuff. So the same component that you find in the conventional finance, you find in Islamic finance, right? And in the different segments or in different sector of the industry, the activities are the same. You know, whether it's conventional or Islamic, is the same. Private equity is still private equity in conventional finance. It's still private equity inside finance. Right? There's no different. But the contract, the behavior are different. And that's important. Right? The second question on SMEs, SME in Malaysia at least, we support SME both from a private equity perspective as well as financing. I think banks like CIMB, we tell customers, you should not borrow. Right? You should take equity. Or we tell customers, look, you have enough equity, you should borrow. From a Sharia compliant perspective. Right? So, at the end of the day, the asset for SME financing is very huge in Malaysia, among Islamic banks in Malaysia. It comprises roughly between 20 to 30% of the balance sheet, okay, in terms of financing to SMEs. So, unlike other markets, there's a lot of focus on big corporates or high net worth individuals. In Malaysia and Indonesia, for example, across all the customer segments, they are catered for by Islamic finance. Thank you.
Mr. Faisal, do you have?
I think no, that's fine. I think the second question was aimed at Malaysia anyway, and that's fine, I think.
So is there any other questions from the floor? Yes?
Hi, I'm Diana from Sukuk University. I think around last week, one of the newspapers in Malaysia came out with an article saying that Majlis Fatwa said that Forex is haram. Can you please comment on that?
Alright. There's nothing wrong with Forex trading under Sharia. The only problem is that if you do it online, the National Fatwa Council make an opinion that online Forex trading is disallowed. And the reason why it is disallowed, first instance, it's not licensed. Alright? It's totally against Sharia. You must do something based on the law. So if it's not licensed, you are not legal under the law. Right? Therefore, it's against Sharia. Secondly, when you trade online, there is a leverage mechanism there that is conventional in nature. Alright? And when you trade online, thirdly, the requirement for the asset to be available for delivery is not present as well. So question is, if I trade, if I decide not to, say I buy and then I decide not to sell, if I want the money, alright, if I ask for that money cannot come, doesn't come to me, right? Because it's not available for delivery, right? So these are the reasons why online Forex trading was declared as disallowed. Right? Forex trading per se is allowed, right? And the one that is done by licensed money changer and licensed financial institutions, the transactions all there are approved by the Sharia Advisory Council or the Central Bank, they are fine under Sharia. I hope that clarifies.
Anyone else? Yeah.
I would like to address this to Mr. Justice. What is your comment on the recent political attack on the bonuses of investment banking?
Was that an attack at all?
What is your bonus?
Yeah, it wasn't that good, but I think the entire issue was more political than what has actually been within the bank. So banks like every other companies in the world, if you work for a company, if you perform, you've done well for a company, the company performs well, the company will reward anybody who works for the company a very good remuneration, a very good reward package. So that's a very standard thing that spans across the world. No matter what industry you're in, it's exactly the same. Whereas the banks, yes, I have to say some of the banks do rewards, do encourage that. So the bonuses, I think the biggest issue why it came out was the bonuses somehow encourage people into greed and take excessive risk, which somehow triggers the whole crisis that we all have as today. So I think that's what the politicians are actually trying to target, but the press obviously filters it and writes something that everybody likes to read as usual, because you wouldn't read the press if it's not attractive at all. So that's my own view.
If I may add to that, to me, in any business or in any company, it's a balance between the expectation of shareholder and the expectation of the employee. At the end of the day, it is the shareholder that decide whether the bonus is appropriate or not appropriate, right? Because it's their business, and if they don't pay enough or they pay too much, it's their money, right? But if currently all shareholders of banks are fine with the bonuses paid, but it just so happened because of this crisis, a lot of banks are now owned by government, right? Because they were bailed out, and as shareholder, therefore, it is their right to say whether the bonus is okay or not okay, right? So I think they should have essentially be very focused in saying, for the banks that I own, alright, I want them to behave in this manner, alright. That is separate from the regulator, alright. The regulator need to manage systemic integrity of the market, okay, to manage stability of market. So they believe that there are certain misbehavior on the part of bankers because of the bonus culture, right? So, and they want to come in to regulate that part. Okay? So there are two things here. One is shareholder, alright? The other one is the regulator. So we cannot confuse the two. And the government will not remain shareholder forever, right? They will eventually make sure that the private take over the banks again. So that issue, that conflict between shareholder and management can be easily resolved once they sell down the banks, right, to private sector. But the regulation part will persist, will remain, because systemic integrity has been found to be challenged because of this bonus culture. So they will want to put some form of control or guidance. There is a guidance already, right? But there's no rule. It's just a guidance on how bonuses should be paid and things like that, in terms of the ability to take back the bonus or to defer payment for certain period of time instead of just one-off payment, that kind of stuff. Okay, so those guidance have been put in place, and I don't think there is any problem with that guidance. That guidance will create a better behavior. Thank you.
Right. I guess that concludes our forum for the day. Lastly, to
Can I-
close.
One more
Oh,
question. Sorry.
all right.
Hi, I'm Nadira from LSE. I have a question. With the introduction of the IIBR as an attempt to replace the LIBOR as a benchmark rate, some say that it's basically LIBOR in a different form, but there are reports saying that there are more banks joining and participating in the rate. So what's the prospect of that? Do you see it replacing and being the main rate in the IRBR as the main rate in Islamic finance?
Personally, I disagree in having a separate benchmark. But having said that, CIMB is part of the banks that contribute to the new benchmark because we want to see whether it works or not. And the reason why I disagree that for two benchmarks existing in the same market is because client can arbitrage. It is very dangerous, right? And for Islamic finance today, in its level of strength at this moment in time, it cannot afford that arbitrage. It would kill the industry. All right. But IRBR is there, and we are monitoring closely whether or not it is viable. The moment we identify that it is confirmed that it's not viable, we'll kill it. As simple as that. All right. See, when you talk about pricing, very simple. Under Sharia, I can plug from the air. Very simple. Willing buyer, willing seller. This is a basic principle under Sharia. You and I agree on a price, full stop. That's what we agree on. Okay. There's no duress, there's no bullying or whatever on anybody's part. We agree. Halas, we proceed. Right? But for a market to operate effectively, right, we're not talking about you and I, we are talking about thousands and millions of people that is interacting in the same market. Right? We need to have consistency. We need to have reference, right, so that we can be fair to everyone. Right? Because if we don't have a reference rate, with one person, okay, I agree on this rate. With another person, I agree on this rate. With the other person, oh, I charge huge amount of money. Alright? But I don't like the face, for example. Alright? So there is no fairness there. Alright? So benchmark rate allows for consistency, allows for effectiveness, and it allows for fairness. Right? That's why we want to have benchmark. So to me, as I said earlier, the term interest is not haram. The number is not haram. There's no such thing as Islamic mathematics. Alright? There's only mathematics. So at the end of the day, LIBOR is LIBOR, full stop. Because I can plug the number from the air. So why not I just take that reference rate? What's wrong? If I can plug a number from the air, why can't I just look at a reference rate that has been there for many years, irrespective of the basis of that reference rate? Right? I can have a reference rate of the average rental in London. Right? But then again, what is a rental rate to a financing transaction? Of course I can do it, but if that reference rate is more effective, more efficient, why am I using another reference rate that is not effective and efficient? Because the average rental rate differs based on type of properties, for example. Right? So again, reference rate are reference rate. It got nothing to do with Sharia. Alright, it's just a number. What is important is how you use the number.
a grey and tired.